Okay,
good?
we're good to go.
All right. So I'm looking at that camera. Are we online? Hi, welcome everybody to MedCity Invest. This is MedCityNews.com's annual healthcare investing conference. I'm Chris Seper. I run MedCityNews.com and I'm your host for Invest. Our first keynote is about a half an hour away, but we're having another feature of the conference that we're doing to connect our MedCity News audience with the real-time events happening here in Chicago. We're calling it an opportunity series, where we're interviewing investors and others about some of the undercapitalized or not yet totally realized opportunities for healthcare investors. It's going to be everything from parts of the world like Israel and Asia. It's going to be certain sectors like women's health or pediatrics. But we're going to have all of these conversations live all day during the conference, and you can watch them live on MedCity News. You're also going to be part of a live blog that we're going to constantly update as part of the conference. We're starting our Invest Now conversations with one of the more important early stage funders in healthcare. That's the angel investor. You know, traditionally, obviously the most important gateway to early stage innovation, but obviously a constantly evolving and new tool that is transforming healthcare. And I'm here with Dan Kincaid. He's with Queen City Angels. Dan, it's great to see you.
Thanks for having me. It's a pleasure to be here.
No problem. So I'm going to tell you a little bit about Dan. Dan is a seasoned startup executive and angel investor. As I mentioned, he's a member of Queen City Angels in Cincinnati. They're actually just about to begin investing in a $10 million fund. But overall already, they've done $45 million worth of investments in 192 companies. Many of those are in the life sciences and digital health space. Dan himself sits on the board of MediCheck and Ready Set Surgical. And he's also the new CEO of Sense Diagnostics. It's a Queen City Angels-backed startup developing a non-invasive brain injury monitor for use with traumatic brain injuries and strokes.
Well, we're not quite QCA-backed yet.
Oh, not QCA-backed?
We're hopeful.
They will soon to be a QCA-backed company, right? So Dan, look, you've been an angel investor for a long time. You've seen a lot of these changes and trends in healthcare investing, right? You're making the decisions with Queen City Angels. It's about to launch a $10 million fund, right? Like, how have you seen angel investing change? Give me the state of angel investing here in 2016.
Well, from a healthcare perspective, it's kind of a good news, bad news, good news situation. When I started in 2009, you know, healthcare was our number one sector that we invest in. It still is. That's the good news. I will say that as a proportion of our investment, it's gone down quite a bit.
I don't know if they heard that on, this is the glory of live video, but something just collapsed back there. That's all right.
So, but I have seen it decrease a little bit. We've developed a focus, in addition to healthcare, on consumer digital. Now, I will say that over the last 6 to 9 months, we've actually started to swing back the other way. We're seeing renewed focus on healthcare. From a sector standpoint, within healthcare, you know, if you look at 2009, we were doing things like stem cell companies, pharmacogenomic research, testing tools. That shifted more towards medical device and health IT. Health IT is an area where we've made significant investments in the last few years that are starting to pay off. But as the economy's picked up, as biotech has gotten hot in the market, you're starting to see angels slip a little bit more into the therapeutic space again.
And you know, the story has been angels are going later stage. I mean, is that what you're seeing now with Queen City?
Yeah, I think that's true. Not necessarily later stage, but we're looking for more market validation. Have you done a lot of customer discovery? So, you know, one of the things that we're really focusing now on is what's the state of reimbursement for your product, and how will the customers that you're selling to make money using it? So that's a little bit of a change from what we had done previously.
And I get a vibe on that. And you know, you've been, again, doing this for a while. Angels have cut their teeth, it sounds like. So you're right. There was kind of your out-of-the-box due diligence, right? But now you are shifting to that. I mean, have you? What also is happening as a result of that experience, you know, as you get a group of angel investors who know healthcare better, simply through investing? Right.
So the healthcare is, as you know, with the Affordable Care Act, reimbursement systems are changing dramatically. The incentives are changing. And so it creates a lot of opportunities for folks who have a technology that can take cost out of the system, improve care, really giving the idea that what we have here is an opportunity to sell a product without having to get, you know, a new CPT code approved, which can take years. That was one of the areas where we've been in some investments since 2008, the pharmacogenomic things I talked about. One of the major challenges there was the CPT codes that they bill were not stacked, or they couldn't get a correct CPT code stacked to really make the money that we originally planned. It took them 3 years to get through the process of creating their own CPT code. Thank goodness they now have it, and things are moving along, but it's taken longer than we originally thought. So what we're looking for now, again, is companies that can take cost out of the system, particularly in the capitated or DRG reimbursement situation with hospitals. The customer can make money by being more efficient in the way they deliver care.
Is there a, with Angels going later stage, right? This is the obsession now. Like, where do you fill that gap? I mean, if you're going upstream, where are you getting your deal flow from? How are you finding companies, even like, your company, Sense Diagnostics?
Yeah. We're being more proactive in the way we find deals. Traditionally, we waited for folks to come to us. For example, the way I found my new company, a number of us at Queen City Angels have been actively involved in the University of Cincinnati's Technology Accelerator, where we serve as executives and residents. There's 3 of us that do that. That gives us a good view of promising technologies coming out of the university. We then help them, bridge that valley of death, through early investment. So I invested in my company prior to going to the angel community. Also helping them with things like SBIR grants and the commercialization plans that you need for those types of instruments, where we're really adding value early on. In addition to the UC Accelerator, we're getting involved heavily with mentoring with accelerators around town. We do a lot of stuff with the Brandery, which is more consumer digital. There's a number of those here in town. Ocean in Cincinnati is another one that we get involved with as well.
Well, that's fascinating to me because, I think you described angels like many would, right? People that would be high net worth individuals, and people would bring them companies, or maybe they would find a favorite company and bring that to the group. The things you're talking about, I've always associated with venture or more sophisticated partnerships across corporate lines. This doesn't sound like something angels were doing even 3 years ago.
Well, we're getting better at it. I think there was always some level of community involvement, but particularly as the ecosystems have gotten richer, the angels want to participate in that ecosystem. We want to see those companies. We want to be involved with them because there's good investment opportunity. So that's requiring an investment of our time to get out there. And frankly, it's just a lot of fun to get to hang out with the entrepreneurs. So I love doing this stuff.
Well, now, we've talked a lot about what angels are doing. Is there any organizations or venture vehicles that have started to emerge here in the last few years that you wish, as an angel, you had a better grip on? Are there others that you say, where can the angel community, where does the angel community learn more about what's happening with the investing community?
Well, I can't speak for everybody, but for our group, I would love to see us have more ties to the corporate venture arms. It's kind of an area where they've been a lot more active. They're going earlier. They would seem to be natural partners for us. Maybe part of it's location, maybe part of it's just us not reaching out more aggressively. But we need those kinds of connections to the big companies who could be development partners, not only from a funding standpoint, but just from a market validation and market connection standpoint.
Is there, I want to circle back. As I mentioned, Queen City Angels is about to start investing again. They've got a $10 million fund they just started. It's a partnership, I believe, with the state of Ohio.
Yep.
How big of a chunk of that 10 million do you think is going to go to healthcare companies? And is there a certain investment focus for your angel group?
Yeah. Traditionally, about 30 to 40% of our investments are in in healthcare companies. Probably on a dollar basis, it's more like half.
Okay.
So, if that holds true, and I think it will, we're probably looking at about $5 million to invest out of the fund. Now, with our group, in addition to the fund, we also invest individually in companies. So, that could be as much as $7.5 to $10 million just for healthcare in Ohio. We do have an Ohio focus. Part of that is because we partner with the state. They have the Third Frontier program, which is a bond fund created by the citizens of Ohio to develop high-tech jobs. And so, there is a Ohio-centric focus to it. Not to say we wouldn't invest in other companies or companies from other states. We do that. Usually through syndication deals with other angel groups. We'll look at stuff from Indianapolis, Louisville, Cleveland, Pittsburgh.
How much are you syndicating deals now? And I mean, and do you know in memory in the last few years, what's the largest round Queen Cities has been a part of on the healthcare side?
On the healthcare side, I think we were part of a $2 million round that was all angel groups invested in it. Our syndication, we're doing a lot more syndication. And syndication makes sense from an angel perspective because you're putting fewer dollars in yourself. There's more dollars around the table. It diversifies the risk. And, I think angel groups are starting to become much more sophisticated about, portfolio management and handling that risk with these startup companies, particularly in healthcare where you have a longer pathway. The other way we're starting to manage that risk is by looking at things that are shorter pathways to market. So more devices, particularly de novos or PMAs that are non-significant risk type studies. Orphan drugs are another focus of ours, as opposed to your traditional therapeutic that's going to take, $100 million to get to market. You're looking at an orphan drug, maybe taking 15, decreases the financing risk significantly.
Our audience here at Invest is heavily investor, but we do have 44 startup companies here that are pitching, and we've got a lot more in the MedCity News audience. If you would give advice to entrepreneurs, what's something that you've engaged in you'd like to see more out of them, either when they're giving the proposals to Queen City Angels, when they're engaging with angels? What's something you'd like to tell them to give them advice?
Yeah, there's no substitute for getting out of your office and talking to people. The more of your customers you can focus on and talk to, the better off you're going to be. You're going to understand the value proposition. I'll give you a good example with my current company. Last summer, as part of our SBIR grant, we had to go talk to a number of hospitals and doctors and CFOs and nurses. We got amazing feedback from just getting in, and particularly talking to our nurses, and we're a neurological monitor. Talking to them, our design parameters came almost directly out of that conversation. So as we were talking to them, we want 10-foot wires, not 8-foot wires, stuff like that. It makes your product so much better in the long run.
And to the venture investors and others who often come into the deals and pound you down, what advice would you give to VCs and others, about the deals that angels are bringing?
Those people.
Yeah, I know. Well, we had a great panel last year actually talking about some of those challenges, but how have you seen that relationship again as a longtime angel? How have you seen that relationship, and what's something you'd love to see out of the relationship with upstream investors that you deal with?
Well, I think part of it's on us to do better due diligence, and we're doing that. Again, syndication helps us because we're able to make a lot more progress before we're bringing in the big venture firms. And we're like anybody else, we find folks who are better partners and folks who are worse partners. So we're going to go to those folks that we can work better with first with our deals.
You mentioned syndication. I mean, do you see a time, and you talked about, investing in companies that may take 15 million instead of 50 million. I mean, it seems that you were getting to a time because of the size of angel funds, because of the ability to syndicate, because of the amount of money that might be needed, particularly on the digital health side, maybe more.
Absolutely.
Where you could do all angel investing, where you wouldn't need a VC or someone else. I mean, is that the dream? I mean, is that a goal?
I don't know if it's dream. If it happened, it would be nice. I mean, angel investing is all about capital efficiency. So getting to market with as little investment and getting as big a return as you can. Digital health is a great example. We have one company that I sit on the board of that the only money in the company is Queen City Angels money. And, we're hoping.
How much is that total?
About 1.2 million.
Okay. What kind of company is it?
It's a digital health company focusing on patient-physician communication, dealing with high-need patients in their homes. So includes medication adherence, disease management, telemedicine potentially, things like that. So what it really does is it allows patients to be managed in between interactions with the healthcare system. I love the company. I've been on the board, been with them for 3 years. But we're the only money in, and we expect to be either profitable or exited by the end of this year.
That's great. Yeah, that's a rare angel story that probably as angels grow, they'd love to do more of. And with an environment where there's a more diverse investment vehicles than ever before. That seems like a real possibility.
Yeah, I think that's true. Certainly, the syndication allows you to carry that company longer. Not talking about Medicheck, they haven't really needed it, but other companies that maybe incur some challenges, you can take them further with just the folks you have around the table to begin with, and that's always helpful.
Fascinating. Well, we're going to be giving these kinds of broadcasts all throughout Invest. As I said, we'll talk about the big opportunities that healthcare investors and entrepreneurs can really take advantage of. You'll also follow our live blog on MedCity News for other details about the conference. We're going to be here through tomorrow. For Dan Kincaid, I'm Chris Seper. Thank you for watching.
Thank you.